Today, we will analyze TSMC, Taiwan's semiconductor manufacturing company, the world's leading semiconductor foundry and the central player in the global semiconductor supply chain, enabling advanced technologies such as artificial intelligence and high-performance computing. In the fourth quarter of fiscal year 2025, TSMC delivered a very strong set of results. Revenue reached $33.7 billion, representing a 25% year-over-year increase and continued sequential growth, driven primarily by strong demand from high-performance computing, especially AI and data center-related chips, along with the explosive sales momentum of the iPhone 17, which further boosted demand for advanced process technologies. In terms of profitability, operating income amounted to $18.2 billion with an operating margin of 54%, while net income reached $16.3 billion, corresponding to a net margin of 48%, highlighting TSMC's ability to sustain very high profitability in this quarter. Next, let's look at TSMC's revenue breakdown by application platform over the long term. The company's total revenue recorded a compound annual growth rate of approximately 20.3% over the period. High-performance computing clearly stands out as the primary growth driver, delivering a strong CAGR of 33.4%, with revenue increasing significantly from around $4.6 billion to $18.7 billion by the end of fiscal year 2025. This growth has been driven mainly by surging demand from artificial intelligence workloads, including AI accelerators and advanced processors, as well as large and sustained orders from global data center operators. In contrast, the smartphone segment posted a more moderate CAGR of around 10.5%, indicating a gradually maturing market where growth is largely seasonal, with revenue spikes concentrated in the fourth quarter in line with the iPhone launch cycle. The remaining segments, including automotive, Internet of Things, and consumer electronics, are smaller in scale but continue to provide incremental contributions to overall revenue growth. Next, let's examine TSMC's revenue breakdown by process technology. In the current mix, 5nm remains the largest contributor, accounting for approximately 35% of wafer revenue, supported by broad adoption across AI chips, data center processors, and flagship smartphones. The 3nm node represents around 28% of revenue and is growing rapidly, emerging as a key growth engine driven by strong demand for AI accelerators and high-performance computing workloads. Meanwhile, the 7nm node contributes about 14% of revenue and continues to play a stable role in the overall portfolio. Taken together, technologies at 7nm and below account for roughly 65% of total company revenue, underscoring TSMC's strong concentration in advanced, high-value nodes. Looking ahead, TSMC is entering the ramp-up phase of its 2nm or N2 process, with volume production expected in the 2025 to 2026 timeframe. This will be TSMC's first node to adopt gate-all-around nanosheet transistor architecture, offering approximately 10 to 15% performance improvement at the same power, or 25 to 30% power reduction at the same performance compared to 3nm, and is positioned to support next-generation AI and data center chips, further reinforcing TSMC's long-term technology leadership. Next, let's examine TSMC's position in the global foundry industry and the overall market outlook. TSMC's foundry market share has continued to expand steadily, rising from around 59% in early 2023 to approximately 71 to 72% by 2025, particularly in advanced nodes below 3nm, where TSMC faces virtually no meaningful competition in terms of both technology and production scale. Looking ahead, the global foundry market is expected to grow at a compound annual growth rate of about 6.9%, expanding from roughly $173 billion in 2025 to $242 billion by 2030. This growth is primarily driven by increasing demand for AI chips, high-performance computing, and data center applications that rely on advanced process technologies. Meanwhile, traditional segments such as smartphones and consumer electronics have entered a mature and largely saturated phase, with slower and more cyclical growth, resulting in a clear shift in industry growth drivers toward AI and HPC, further reinforcing TSMC's leadership in the next cycle. Next, let's look at the global foundry capacity expansion map for the 2025 to 2030 period. Foundry construction and expansion activity is accelerating across the United States, Europe, and Asia. China stands out as the region with the largest number of new fabs, reflecting its push for semiconductor self-sufficiency, although most of these projects are concentrated in mature and legacy process technologies. Within this landscape, TSMC remains the central player. The company continues to position Taiwan as its core manufacturing base for advanced logic nodes, such as 3 nanometers and the upcoming 2 nanometer process, while selectively expanding overseas. In the United States, TSMC's Arizona fabs are oriented towards serving AI, high-performance computing, and data center customers, while in Japan, the company focuses on more mature nodes for automotive and industrial applications. Beyond TSMC, Samsung continues to expand manufacturing capacity in Korea and the United States, leveraging its strengths across both logic and memory, while SK Hynix is focusing heavily on high-performance memory, such as HBM, particularly as DRAM prices enter an upward cycle. These projects illustrate how each company is expanding in line with its core strengths, leveraging the AI wave in areas where it holds the clearest competitive advantages. Now, let's take a closer look at TSMC's relationships with other key players in the semiconductor industry, particularly in the context of the accelerating AI wave. On the customer side in 2026, NVIDIA is expected to remain TSMC's largest customer, accounting for approximately 20% of total revenue, driven by strong demand for AI chips and data center infrastructure. Notably, NVIDIA currently has a substantial backlog of orders for AI processors, providing long-term and highly visible demand for TSMC's advanced process technologies as well as its CoWoS advanced packaging capacity. Beyond NVIDIA, other major customers such as Apple, Broadcom, AMD, MediaTek, Amazon, and Google are also ramping up their AI chip designs, in-house data center silicon, and smart devices, helping TSMC maintain high-capacity utilization while reducing reliance on any single customer. On the supplier side, lithography remains the most critical and capital-intensive step in chip manufacturing, with ASML serving as the near-exclusive supplier of advanced EUV systems. Market expectations for EUV shipments have been revised upward, reflecting the need to build capacity ahead of TSMC's 2 nanometer and A14 process ramp. In deposition and etching, companies such as Tokyo Electron, Lam Research, and Applied Materials play leading roles, while in inspection, KLA holds a dominant position, particularly as 2 nanometer production shifts from sampling to full inspection, driving a sharp increase in demand for inspection equipment. Overall, given TSMC's central role in the AI supply chain, any decisions the company makes regarding technology, capacity, or pricing have the potential to create ripple effects across the entire semiconductor industry. Next, we look at TSMC's net income and margin performance. After a downturn in 2023 due to a weak industry cycle, profitability recovered clearly from the second half of 2024 and accelerated throughout 2025. In the fourth quarter of fiscal 2025, revenue reached approximately $33.7 billion, while net income amounted to $16.3 billion. Notably, net margin expanded to 48%, up sharply from the 37 to 40% range in 2023. This margin expansion reflects an improving product mix with a higher contribution from AI-related chips and advanced process technologies, as well as operating leverage benefits from higher capacity utilization. Next, we look at TSMC's operating expenses. Over the past period, operating expenses grew at a CAGR of approximately 13.8%, driven primarily by increased investment in research and development. R&D spending expanded at a faster pace, with a CAGR of around 17.3%, reflecting TSMC's continued focus on advanced nodes such as 3-nanometer and 2-nanometer technologies. In contrast, selling, general, and administrative expenses grew more moderately, at about 5.3%, indicating effective cost control. In the fourth quarter of fiscal 2025, total operating expenses reached approximately $2.8 billion, with R&D accounting for the majority at around $2.1 billion, underscoring TSMC's long-term commitment to technology leadership. On revenue, from fiscal year 2023 through 2025, TSMC's results have generally tracked market expectations, with some quarters delivering slight upside, driven by stronger demand for advanced nodes and AI-related chips. Looking into 2026, consensus currently expects revenue growth of around 20%, while advanced packaging remains a key upside factor, as Bernstein forecasts CoWoS capacity to increase by roughly 66%, reaching about 125,000 wafers per month by the end of 2026. On earnings, TSMC's EPS has consistently exceeded expectations in recent quarters, supported by margin expansion and a growing contribution from AI-related products. This suggests the company is well-positioned to outperform Wall Street's profit growth assumptions for 2026. In a more optimistic scenario, if earnings grow by around 40% versus the consensus expectation of 20%, EPS in 2026 could reach approximately $14.6 per share, compared with $10.49 in 2025. Investor sentiment toward TSMC's stock remains highly constructive. Based on the latest consensus, the average 12-month price target stands at approximately $410.9, implying around 26% upside from the current price of roughly $326.1. In the bull case, the highest price target reaches about $520, representing upside of more than 50%, driven by strong expectations for AI-related demand, advanced nodes, and expanding advanced packaging capacity. On the downside, the most conservative estimates place the price target near $330, suggesting limited downside risk. In terms of analyst ratings, sentiment remains decisively positive. Based on recent ratings, the prevailing view is strong buy, with the majority of analysts maintaining bullish recommendations and very few neutral views, reflecting broad confidence in TSMC's earnings trajectory, technology leadership, and long-term positioning at the center of the global AI semiconductor supply chain. Thank you for watching. The information presented in this video reflects opinions at the time of publication, is based on sources believed to be reliable, and is provided for informational purposes only. It does not constitute investment advice or a recommendation.